Hello, everyone, and welcome to another edition of CEO and Market Expert Interviews. I'm your host, Lucian. Some of you know me as Triangle Investor from X. Today, my guest is Rafi Farber from the Endgame Investor on Substack. Rafi, welcome, and thank you for coming to my show.
Thanks, Lucian, for having me. It's my first time, and I'm excited to be with you.
Same here, mate. Lately, I'm talking with more and more people like yourself, precious metals bulls, who believe, and excuse my words, shit show is ahead. So my first question is, are we entering the times of serious money supply shrinking followed by recession?
I don't know. I thought we were doing that in 2022, but then the market kept going up. So I can tell you what the numbers are. I can't tell you exactly what the effect is going to be in the immediate sense. But before we get into what the numbers are, just mathematically, we know that the Fed's balance sheet is shrinking, which means the monetary base is shrinking. That's not exactly the money supply. It's the base of dollars on which the money supply is based, because it's a pyramid, right? The money supply is based on the monetary base. So that's shrinking. And at the same time, the amount of dollars changing hands in the repo market every day is rising. And I think it broke $2 trillion yesterday. So if you have a shrinking base and a rising repo market where there's overnight loans being made with more and more dollars with less and less of a base, you're going to end up with some kind of earthquake, crash, repocalypse, something similar to what happened in 2019. It's just mathematical, but in terms of the when, I can't really answer that. I've tried to answer it many times and I've been wrong. So I just know the eventuality. And it's not like years away or anything. I just can't narrow it down to a month. So you were talking about the money supply. I brought that up. When did I bring it up? Maybe in a recent post on the Endgame Investor. So what typically happens with the money supply is that it maxes out just before tax day, which is when banks or bank clients, depositors are gathering all the money that they can and putting in their bank accounts so that they can pay taxes. And then after tax day, all the money gets vacuumed into the Treasury's account at the Fed and out of the money supply so they can spend it on bombing Ukraine or whatever they want to do. Let's not talk about it, what they spend money on. It was bombing Russia. I forget, like whatever country. Anyway, so it's after tax day now. The numbers came in and the money supply is down like $350 billion. So this typically doesn't start to expand again, the money supply, until around August. So we're going to head back into absolute deflation, which means a shrinking money supply. I define it quarter over quarter, but you can define it however you want. The broader, the more accurate generally, because it's always jumping up and down. So I think we're going back into absolute deflation on an annual basis in the next maybe month or two, and that should bring stocks down, equities down, could lead to problems in the banking system, unless spare money somewhere else comes in, which is what happened in 2022. But we are running out. The spare tanks are going to run out. It could be this round, it could be next round, but it's soon.
Yeah, but what keeps Fed away for pumping more money? Nothing, right?
Sorry, what?
What keeps Fed away from pumping more money in the system?
What keeps them from doing that?
Yeah.
Scary amounts of consumer price increases. I don't like calling it inflation, but if the public realizes that the Fed is going to print into an inflationary wave, they'll hold it off for as long as possible until they absolutely have to, because the banking system is going to collapse. So what keeps them from pumping more money into the system? Fear of the public. That's about it. So if the public is going to be upset about inflation until their bank accounts are going to dry up, because there's not enough dollars in the system to cushion deposit accounts. So if the public clamors for money printing, they'll print it, and if they're worried about inflation, what they call inflation, they'll stop. Basically, the Fed follows the public, what the public allows them to do. That's all.
Yeah. Good answer. So you see a market correction or even meltdown down the road. Do you have any specific let's say numbers on will we have a correction of 10, 30%, or do you see really a major meltdown down the
Well, it depends what you're by which measure you're measuring this 10 or 30%. If you're measuring it in dollars, I have no idea. Or in Dow points, which are measured in dollars theoretically. So when you're measuring in a yardstick that is constantly expanding and contracting and over time expanding, then you could theoretically have no nominal meltdown in the market at all.
Yeah.
But in terms of real money, in terms of an actual measure, the stocks are going to implode. I mean, they're going to reach all-time lows, like 1932 Great Depression lows, and even lower than that. Not maybe they'll even go up in dollar terms. Maybe the Nasdaq and the Dow will go up, but the gold to Dow ratio, the Dow to gold ratio, or the S&P to gold ratio will hit, somewhere around 1-to-1, like it did in 1980. That's where we're headed. So it means that no matter how many dollars your stock portfolio is worth, it's not going to buy much once we're at the bottom. And it just depends what the Fed exactly decides to do and to what degree and how much. But whatever they decide to do, the owners of real assets, real money, will increase their purchasing power by the most. Real assets generally, but gold and silver specifically, because the more liquid the real assets you hold, the better off you'll be. Like if you hold real estate or luxury cars, or those are real things and they'll have value, definitely, but they will be much less liquid than money, which is gold and silver. So the liquidity of the real asset that you own will increase your purchasing power the more liquid it is. So
Yeah. So
whatever you
what?
decide to hold money.
Yeah. So what you're saying that we should exchange every available paper money for hard asset, gold, silver, real estate.
No, it depends on your situation. I wouldn't say zero out your dollars now. It depends if you have debt. Sorry, if you have debt to service. If you're in debt already, how many assets you hold, and whether you need to make payments on them. So I never tell anyone to like just get rid of all your dollars right now, panic out of them and buy gold and silver. It might not, for trading purposes, it might not be the best time to buy gold and silver right now. I
Yeah.
mean, we're at all-time
All
highs
time
in
high.
gold, we're past
Yeah.
30 in silver. But you never really want to do that in any situation, because by the time everyone's doing that, no one's going to get any. So what I do and what I think is the most sensible is you treat gold and silver like money, right? You don't go to, when you're getting your paycheck, you don't go to your boss and you say, I want my entire annual salary right now,
Yeah.
because I'm panicking. You say you get your salary or your business income or whatever it is, either by the week or by the month or however you're paid. And if you treat gold and silver like money, you say, okay, so every month I'll take a certain percentage of the dollar salary or the euro salary or whatever fiat currency I earn, and just put it into real money, whatever the price is, whatever it is, doesn't matter, because it's money,
Yeah.
right? You're not going to be negotiating over that with your boss on your dollars. So don't do it with gold and silver either.
Yeah, Rafi, how can governments change monetary system, or better to say, transform it to become more efficient, better, fair? What do you think?
Get out of it. That you can transpose that question onto anything. Like, how can government make this or that more efficient? They can't. They can only make it worse. Everything they go into makes it worse. Now, you can argue that some things, I don't happen to argue this, but I understand people who do argue it. You can argue that the government needs to be in charge of defense, because we can't have competing defense companies, because that would just be war. But okay, so or the government needs to be in charge of courts, because you need an authority to settle disputes. Well, we've seen what the government does with courts. We've seen what they do with war. It's bad, and it's bad. So the best that the government can do to make money more efficient is get out of it. Close the Fed, close the central banks, let banks manage their own risks and compete with each other, right? Why don't we see supermarket chains, let's say, I don't know, Walmart or Publix or whatever supermarket chain you're familiar with, why don't we ever see them like one day they're full of food and then a week later there's a crash and there's like nothing in there? You never see these things.
Yeah.
Whereas in a bank you do. Why is that? Like one day they have money or dollars or euros in their accounts and everyone's fine, and the next day they crash. How does that happen? Well, because the money that they have is fake. It's only claims on it. So and that's only possible because you have a government managed central bank that's telling these banks what to do, and that's what causes crashes. So the answer is have banks compete with each other so that they don't, just like supermarkets compete with each other and they don't suddenly run out of food, right? It's simple. Get out.
Okay. As we mentioned, gold is at all-time highs. I see that some of the people are caught by some sort of euphoria, and some known names are saying gold is going to, I don't know, 3,000, 5,000, 8,000. The numbers are insane. What is your take on those numbers, and do you have your own projection of future gold price?
Yeah, but first I just want to put us in the correct frame of mind. Gold doesn't go anywhere. I mean, it does. It changes in purchasing power slightly, and in a fiat collapse, you will have a very large revaluation of gold in real terms, which has happened before. It's not like this hasn't happened before. It happened in 1934 when gold was revalued, when really the dollar was revalued. Gold wasn't revalued. The dollar was revalued from $21 an ounce to $35 an ounce. And what did that do? That took away purchasing power from people with dollars and gave it to people with gold. It just so happened that Roosevelt had stolen the entire gold supply before he did that, so he could have all the purchasing power for himself and his government. So we have seen these sudden revaluations in purchasing power in gold, but it's not real. What happened in 1934 was not that gold suddenly increases purchasing power. It's that people with dollars suddenly, their true situation became realized, and therefore the demand from dollar holders for stuff went down, and that demand gets absorbed by gold holders, right? So we're going to see the same thing, but instead of being directed by the government or Roosevelt's administration stealing the gold supply, it's going to be directed by the market. Everyone with dollars or euros or yen or whatever, they're going to suddenly realize through the market that their purchasing power is a lot lower than it used to be, and we're still going to have pretty much the same amount of goods and services from the day before to the day after. It's not like a whole bunch of supply is going to be destroyed. So the shrinking in demand for stuff by the lowering purchasing power of fiat is going to be transferred into gold and silver holders, and that's where you're going to have your difference.
Yeah.
So my numbers for gold and silver, they don't really matter. I can give you a number based on how money is supposed to work, right? You have these fiat dollars, which are not exactly fiat. They're born from gold. The dollar was not exactly born in gold, but one incarnation of it was gold before it was silver. So the dollar still draws its value from its gold value. People don't see it that way, but they're wrong. You can't just have a currency born out of nothing. Every currency that exists was born out of another currency exchange rate, which was born out of eventually gold and silver. It all goes back to the past. So, sorry, on that theory, on that reasoning, the issuer of the dollar is the Fed. The Fed's balance sheet is, what is it, $7.2 trillion, if I remember correctly. And theoretically, they have some gold. So at the point where all of the gold on their balance sheet is worth $7.2 trillion, that would be the 100% backing of all their assets, all their liabilities, and all the debt on the balance sheet would go to zero. So that number is something like $45,000, $50,000. And the higher the balance sheet goes, the more debt is on it, the more debt has to be revalued, and then the higher the dollar amount. But the dollar amount doesn't matter. It matters how much it's going to buy you, and it's going to buy you a lot. And that's all you really need to know. And if you want to do math in your head and figure out exactly what it is, that could be fun, but it doesn't really matter.
Yeah. Do you believe that silver will outperform gold?
Yes, but it's going to be a lot more volatile and difficult to hold. I hold silver for different reasons than I hold gold. The reason I hold gold is because I want to get through the end of the fiat monetary system without worrying what I'm going to do with it while it's happening. So I expect gold to, like, let's say, make a moonshot to, I don't know, $30,000-$40,000, let's say, and then settle down somewhere when the central banks are dead, and the purchasing power to settle down kind of level. I don't know exactly where. With silver, what I expect it to do is make a moonshot to, let's say, $400-$500 or whatever it's going to be.
Wow.
And then I expect the monetary system to go back onto a gold standard, not statutorily, not like the government's going to get together and Congress is going to pass an act where we're going back on gold. That's not going to happen. I'm talking about the market doing it by force, enforcing the government, or the government completely disbanding. I don't know exactly what's going to happen.
Yeah.
So in the throes of the end game, when people are really panicking, that's when silver is really going to outperform. Like maybe we're at like 70 to 1 now. I expect us to go to 15 to 1 because it happens every time there's a monetary panic. So in that short window of time, you're going to have an opportunity to use silver to buy incredible amounts of real goods and services. But it's not going to last that long. It'll last maybe a few weeks, a few months at that number. And then when things calm down, we'll go back to gold and rather than silver, because we can't really sustain a world where people are trading coins for that long. It's just an emergency measure. So to get through the end game itself, when people are panicking, you want silver to spend, and to get to the other side of it without wondering how much it's worth and changing value all the time, you want gold just to settle your mind.
Okay. Do you believe that in that scenario, it's a smart move to buy gold, silver equities? If yes, which ones? Producers, explorers, developers?
Yes, if you have extra money, extra dollars to speculate on,
Yeah.
the main reason that I hold gold and silver equities is that I don't know exactly where my income is going to come from when the fiat monetary system collapses. I'm not going to be doing this. I'm not going to be getting any YouTube ad money. It's not going to be worth anything.
Okay.
And all my income is probably going to dry up because I'm just a talking head. So I own equities, gold and silver equities, because if the dollar isn't working, who can pay dividends? Well, gold and silver miners can, because they dig up money and they can give me a certificate theoretically for actual money, which could be in income. I can't guarantee that. I don't know exactly what's going to happen to them. I don't know if they're going to get seized or mobbed. I don't know. So you have to be willing to speculate, and you have to be willing to say, I don't know exactly what's going to happen to this, but I'm gonna take put a percentage of my wealth in it. And I wouldn't recommend it. I don't recommend anything, but I do that. But most of my money is in physical, right? Not stocks.
Okay. You mentioned shortly real estate market. Do you see a bubble over there maybe? Because some new data are pointing to some serious problems ahead for real estate market. What's your take?
Yeah. Every time there is a serious printing of money or money printing operation, real estate always goes up, but it doesn't really go up. It just goes up in dollar terms. The bubble is not in real estate; it's in the dollar. It just reflects
Yeah.
itself in real estate. I'm reading a diary of the Great Depression now, a real working class lawyer's diary, written by, I think his name is Benjamin Roth, and he's talking about in 1931, 1932, how real estate was just in complete collapse. I mean, complete collapse meaning there's just like these huge lots of real estate, commercial real estate, residential real estate, that the mortgages and the taxes owed on this stuff is higher than its value. So people just like stop paying anything. And if they want to stop paying taxes, they actually destroy the house. They destroy the real estate, so they don't have those liabilities anymore. So, I mean, it happened in the early 1930s. It happened in 2008. It's going to happen again. So we're people who are investing in real estate, going into debt to invest in real estate. If you can pay in cash, that's one thing. Like, okay, So you'll have and you need to use the building for whatever it is you need,
Yeah.
then fine. But if you're investing in real estate because you want to collect the rents, or you're looking for an increase in the capital price, that's not a good idea right now, because we know what happens when the money printing stops, and it will stop, whether by deflation or hyperinflation. It's the same thing.
Okay. What about other commodities performance? Are you bullish on some other commodities besides gold, precious metals?
Well, all commodities. Really, the question is, like, what do I want to hold when there's no more money? And the answer is, I want to hold money. Doesn't mean that oil is the bad investment, or that other commodities are a bad investment. I mean, they're all good. They're all real assets. They're all pretty good. And if you are an energy expert and you understand the industry better than I do, I'm not an energy expert, then energy stocks could be good for you too. They're not going to go to zero, and oil is definitely not going to go to zero. So there are some people are experts in uranium and wheat and food, and owning a food distribution company, it could be a good idea also. They can pay dividends, maybe not when the monetary system is down, but eventually they'll come back. So a balance of commodity focused stocks and basic necessities is probably a good idea if you don't want to be completely invested in gold and silver. I understand that, because that makes your portfolio pretty volatile. I'm not going to deny that. So a mix of commodity investments is fine.
Yeah, definitely. Final question, physical metals buying, so silver or gold, which ones do you prefer? The bars, coins, what's your favorite?
I prefer coins. The premiums are not that much higher than bars. Premiums are really low right now. Well, I can't personally afford a gold bar. I'm not that rich.
Okay.
So small 1 ounce coins are even a lot for me. But a silver bar, I have a few of them just to have. But silver coins, like, I think my favorite is like junk silver. You can get silver dimes, quarters, half dollars, those kinds of things. They're recognizable. They will have continuity with the current monetary system of dimes and quarters. They're basically the same size. People will recognize them, and you'll be able to. And a dime, you'll be able to get. It's usually like, let's say, a gallon of gasoline for a dime. Right. And walking around with bigger coins or bars, it's going to be hard to exchange those for retail amounts of stuff. It won't be impossible. It'll be difficult. And I think the highest premiums and the most sought after coins will be, pretty much dimes and quarters.
Mm,
Right. And we'll go back to like the 1930s, when people were exchanging these things for food like it was normal, because it was normal, and it'll be normal again for a while.
yeah. With coins, any special, do you like, what mint do you like the most? Australian, American,
I would say, look,
Canadian?
if you're in Australia, your safest bet will probably be Australian coins. If you're in Croatia, then Eastern European Croatian coins. If you're in the US, US coins. It doesn't mean that other coins won't work. It's
Yeah.
just the people that you're going to have to trade with, if you're assuming that you're going to be trading these coins around, probably not gold. You won't be trading gold coins around unless you're buying a business, or a yacht or whatever. But just if you're considering spending these coins in an end game scenario, which is what I do, which is why I have coins, then stick with your country's coins, because it'll be the most recognizable around the people that you have to trade with. That's all.
Okay. Rafi, thank you very much for coming to my show. It was a great chat, as I expected, and I hope to have you again sometime soon again. Thank you.
Yeah, hope to be back. Thanks for having me, Lucian.